that's actually a key part of our theme is focusing on the lower segment of the market. So we're at what I'm defining as even below middle market to lower middle market. And part of that is these are just much smaller deals than larger funds really can spend time focusing on because they have so much capital they're looking to deploy. And so a number of the opportunities that I've talked about as an example here are just deals that are too small for somebody who has to deploy billions of dollars of capital to spend time on. But for us, we can go in and acquire a terminal for a sub $20 million acquisition price, put another $20 to $30 million of capital behind it in growth projects. And then as that creates incremental value, now we're selling a hopefully a couple hundred or few $100 million asset that now starts to be a platform for that larger fund to invest in. And so that's actually a key part of our theme is focusing on the lower segment of the market. The reason we like focusing in that segment of the market is it's a lot easier to go to a counterparty and just have a proprietary conversation on an asset of that size that they're willing to transact. It usually can be directly with an asset manager or somebody's part of running a particular division within that larger organization, has the authority to make the decision on a direct asset transaction of that size. When you start talking about businesses selling several $100 million assets, usually that goes to board level, executive level, then they have to run a full process. You have investment banks running a process, generates more competition, and we'd like to be the ones selling into that competition, not buying into it. And that's why we think kind of focusing on that lower middle market, we can utilize the network of relationships I mentioned earlier to get in front of counterparties and proprietarily negotiate some of these smaller transactions.